Hi everyone, I'm Anamitra and welcome to the Pre-Seed Show. At A4 Capital, we only invest in companies that are at the pre-seed stage. And to us, that's companies that are just getting started, pre-revenue, pre-traction, pre-product, pre-everything. And in this show, I specifically talk to founders who are going through that journey or have successfully gone through that journey. Because it's the hardest part about company building, which is starting a product, getting it out to market, going from 0 to 1, starting with your belief and dreams and turning it into some kind of a reality. That first 18 months is really, really tough. In this show today, I'm going to talk to Zack, who's the CEO of Seel. Seel is a super interesting company. They are powering returns for e-commerce shipping. Half of the internet, half of commerce that Amazon doesn't serve, returns are really hard for consumers. And that's what Seel provides, protection against anything that you buy online. Seel is particularly interesting to me because most companies that start off at the pre-seed stage, many of them want to be category creators like Uber and Airbnb and Dropbox and so on, but most of them are not able to actually make it happen. However, with Seel, I have a different feeling. And I think you will feel the same way once you hear more from Zack. So without further ado, let's get down to it. Hey, Zack, good to see you. Thanks for coming on the show. We've known each other for 4+ years. I think we led your pre-seed round back in 2019 and have seen the company and you and Bill go through the ups and downs. But for many people, especially a lot of the folks who are trying to start a company, they may not know Seel as well. So why don't you do an elevator pitch about Seel? Tell us what Seel is about.
Yeah, absolutely. Thanks for having me, Anamitra. The way I think about Seel is we're building a new type of financial products to enable risk-free shopping in commerce. And so when people buy stuff from Amazon, they enjoy free return. There's that, order in the next 7 hours for delivery by Tuesday type of like on-time delivery guarantee. A lot of things have limited warranty and everything is pretty much authentic. But when you shop outside of the Amazon ecosystem, return policy starts to vary, fulfillment starts to vary. So that risk-free shopping experience is not really, consistently present outside of the Amazon ecosystem. So what we're doing is we're using algorithms to build a new category of financial products that give consumers the option to buy everything they want anywhere on the internet risk-free.
And so for people who are very familiar with Amazon, of course, is that whenever you buy something, it kind of arrives in a day or two. And if you don't like it, you just return it. No big deal. You don't pay anything, and it just takes care of itself. But every now and then, so people are so used to that experience, when you try to do that on, let's say, a Shopify store or another brand or a retailer like Macy's or Saks or pretty much anything, the returns are on you. And then you also don't know when the product will be delivered, and if you want to return it, that's the pain you are all solving, right? So that Amazon-like experience for everybody else.
Exactly.
And you're doing it in an interesting way. Can you talk a little bit about where this really blossoms for a user? What is the consumer experience here? If you buy something online, and how would they know about Seel? Do they see Seel? Do they have to go to the Seel website before they will figure this out?
Yeah. So when we first started attacking the sort of the return problem, we looked into why merchants, why a lot of merchants don't have a blanket return policy, and when you look into that, a big part of it is it's the unit economics just doesn't work out. And when you zoom like further into it, it's actually 20% of the shoppers of 20% of everyone that return 80% of the products. In fact, the 95% of the users are subsidizing for 5% of the, you can call it like habitual returners. How we made the economics work for brands and retailers to offer return in a sustainable way is so we deploy a JavaScript pixel that uses shopping behavior data to inform which shopping sessions are likely result in a return versus which ones were not. And so that enables us to offer that return option at checkout or on the product detail page at a really low cost for almost all of the consumers. So the experience from the consumer side is when they're buying something that's final sale, they have the option to basically buy the same item as refundable for a slightly higher fee. And if the item doesn't fit, or it arrived late, or they want to return it for whatever reason, they send it back to Seel, and Seel would issue a full refund to the consumer. So the experience is essentially a risk-free shopping experience for the consumer without putting all the financial burden on the merchant. So that experience is what enables us to bring that that great like seamless return experience and risk-free shopping experience to every retailer and brand and marketplace outside of the Amazon ecosystem.
That's pretty cool. So basically, when you buy anything online outside of Amazon, which is huge, anything online, you can make it refundable if you use Seal along with that purchase. Um, that's pretty big. Can you talk a little bit about how big this could be?
Yeah, absolutely. So when we first started, like running the returns program, we were very much focused on just the final sell collection, and across brands, and also marketplaces. A lot of marketplaces and resale platforms all have a lot of final sell items. So that market alone is pretty big. We identified 70 just marketplaces alone that are doing hundreds of millions to billions of dollars in GMV each. And so that market alone is pretty substantial. But what also got interesting is we also looked into how we can help brands that already offer an in-house return program to do it in a more economically sustainable way. So the US GMV hit $1 trillion a year ago, of which roughly 40% of that is Amazon. So that still leaves around $600 billion of GMV that we can help address. And depending on what return rate we assume for that $600 billion in GMV, the market is absolutely however you look at it, the market is absolutely substantial. And e-commerce is still growing at a very high rate in the US. So I think the role that I see Seel play in the broader e-commerce system is to use our ability to enable risk-free shopping experience to help grow the GDP of the online commerce economy.
You talked about returns, right? You talked about making a product refundable. And I think another thing that you mentioned quite a bit is around risk-free in the consumer's mind. Can you talk a little bit more about that? What do you mean by risk-free for consumers?
Yeah, that's a good question. So we actually took the inspiration from buy now pay later. And so buy now pay later is technically a credit product, but consumers don't think about it that way. It's not about point of sale lending as much as it is about removing the sticker shock and make the shopping experience itself more pleasant. Most people that use Affirm or Klarna probably don't really need to finance their $500 purchase. But by splitting the payment across multiple months, that enables that like kind of a more pleasant shopping experience. Same deal for Seel. When people buy something online, they don't expect to return it. They don't expect that it will be late. They don't expect that there is manufacturing quality issues. But by removing those concerns completely out of their mind, it makes the experience that much more pleasant. And that's especially true for consumers that are shopping with a brand or retailer for the first time, where the trust isn't quite there yet. The other angle is actually items arriving on time. So we looked into sort of why people were would initiate returns, and item doesn't fit is obviously a big reason. And then the second, I guess, the non-obvious insight here is also, when fulfillment is delayed, there's a much higher chance of return. So there's a correlation between fulfillment delay and return rate. And it's very understandable. I buy a $200 pair of sneakers today. It arrives tomorrow. I'm still super excited. But if it arrives, 2 weeks from now, that excitement sort of wears off. But the consumer might be incentivized to keep the item if they get $50 back. So Amazon is able to offer that guaranteed arrival date experience because they fulfill 70% of their own orders. So they see a lot of those fulfillment and shipping data. We partnered with one of the world's largest package tracker to and trained a zip code to zip code ETA model on top of those tens of billions of packages delivered in the past couple of years, which allowed us to deliver that same guaranteed arrival date experience on the product detail page for any retailer, brand, marketplace that's not Amazon as well.
Got it. Sounds like there's a lot of data at play, and I want to come back to it because I think that's what makes an Seel a little different and this product a little different. So it sounds like you've talked about sort of two products. One is return assurance, which is make a product refundable, and second is on-time delivery guarantee. These are the two products. It sounds like there could, on top of the data, there could be a platform, and you roll out one product at a time, all driven by e-commerce data or e-commerce purchases. Is that what you see as the vision for the company?
Absolutely. So when we think about how like a brand, retailer, or marketplace run their business, there's the component of building great product and market it well. They're also almost running a risk-bearing like an insurance-like business as well, where they bear the risk on return. If there's like manufacturing defects, they take the financial hit as well. So there's like that post-purchase policy component that's essentially a risk business that should not be the core of what a merchant focuses on. A merchant should be focused on marketing the product and building great products, and not thinking about how to manage their their capital and how to manage the fraud in these post-purchase policy business. So the role that I see Seel play into how merchants think about us is we help them run like we run their post-purchase side of the business professionally. We use algorithms on the returns front and on the on-time guaranteed arrival front, basically to help them build more efficient, programs that enable risk-free shopping for their consumers.
And do these consumers who are shopping, do they get paid out right away when they file a claim, or is it going to be like an auto insurance, or a health insurance, where the idea is to deny claims, is to make sure that somehow consumers don't get paid out? How does the actual payouts work?
Yeah, so payout experience is one of our proudest part of the business. So 98% of our shoppers, we have a dedicated order resolution center where if the order is late or they want to return something, they can just go there, enter their order ID and email, and then 98% of the people will just get a decision within 5 minutes, and they can get paid in store credits or cash. So I would argue it's probably one of the best post-purchase resolution experience there is for consumers. We're not in the business of promising a risk-free shopping experience and then not deliver. We're in the business of delivering a great experience, build trust with consumers, and we just run the program more efficiently through the front end, fraud prevention.
If I go back to where you started, it seems pretty clear right now that you've got the tiger by the tail. You've identified a massive market opportunity that's in flux, that's in shift, massive adoption of online commerce, physical stores shutting down, lots of brands moving online. People are so used to buying online, returning online, maybe accelerated by COVID. That's not going away, and a product like this, which is driven on data, is going to be big, and it's a matter of capturing as many of the brands and merchants as you can. But this is not where you started originally, back in 2019 or so. Can I dial the clock back a little bit to? But what I do remember right from 2019 is you were always talking about risk-free transactions for consumers, peace of mind, getting rid of daily inconveniences, protecting them against it. And you and Bill grew up in China. Can you talk a little bit about what motivated you to work in this with that broad mission?
Yeah, absolutely. So you're exactly right. We started with the thesis that in the past, insurance was almost sold as a standalone product. Auto insurance, health insurance, these are large, like high amount commitments that the people buy for the sake of itself. But there's also a lot of these are insurance products that cover catastrophic events. People buy them out of necessity, not out of pleasure. We see another version of, I guess, risk product where it's about making the moments of transaction more pleasant. Whether it is buying a brand new iPhone, or it's about working for the gig economy, where the income is not stable, or buying things online. So in all kinds of like transactions online, there's that there are risks involved, and it's always in the back of people's head. Could something go wrong here? And if we can take that out, for consumers, it is going to be a better experience for consumers, and also increases the transaction efficiency for the merchant. So we just envision sort of directionally a different type of a different type of risk products that's not about necessity and covering catastrophic events, but more about removing the friction in the in online transactions.
Right. So these are like things where the premium, so the amount of money you may be willing to spend to protect yourself is small, but they happen multiple times a day. So very very high frequency. Um, and e-commerce is one such big one, I guess, right? Now going back to sort of 2019 or so when you first started, there's been lots of sort of twists and turns, different product attempts, different use cases. Can you talk about the first one? I remember it was protecting iPhone buyers against cracked screens, right? That was one of the first ideas you all had.
Yeah, yeah, absolutely. So yeah, we started with that thesis around these kind of high frequency, low severity risk, but we didn't have an idea of what is the exact and specific form of the, like what does the right product look like. One of the first things we tried was building iPhone crack screen protection. And the way, like, the problem we saw was that there's a bunch of like Apple Care and sort of hardware like warranty products that are just very expensive. But if we look into the cost structure, if we partnered with the repair shops themselves, we could dramatically lower the cost of servicing these cracked screens specifically. Then we can bring the cost of the insurance program down to $5 a month in subscription. So that seems to be like a very compelling consumer subscription product. So that was one of the first things we attempted. We spent a couple of months going around, repair shops in the Bay Area, trying to negotiate basically point of sale. After they fixed the screen for a consumer and charged them $150, that's when consumers might be most likely to subscribe to a $5 per month a crack screen protection, so it doesn't happen again. So that was our first product, and it was too operational heavy. And there were a couple of reasons why it probably still would have worked, but it didn't feel like a breakout. It didn't feel like a multi-billion-dollar category creating opportunity. So we moved on to trying a few other things before landing
Yeah.
in the e-commerce space.
I remember there's a small matter of driving around from repair shop to repair shop, picking up cracked iPhones and stuff, and filling up your trunk with iPhone. But I guess one interesting thing from that experience is the notion of attach rate and point of sale. Which is like when you buy an iPhone from the Apple Store, $1,200 or something, and then they sell you Apple Care, $200. If they did it 2 weeks after the purchase, it would be different. People wouldn't not as many people would buy it. But at that moment, when you've just got this $1,200 gem in your hand, you probably want to protect it more. Is that what was one of the learnings about attachment and point of sale?
Yeah, absolutely. So that sort of framework of embedding the relevant risk product at the moments that matter was actually it wasn't obvious to us at first. Like at first, we're just thinking from like a cost of goods sold perspective. Like by negotiating better rates with repair shop, we can bring the cost of claims down, and that would enable the $5 subscription. But the original go to market for that program was we just used Google Ads, and turns out CAC, like the cost of acquisition, was astronomical. So we sort of got forced into exploring point of sale, like repair shops being point of sale as well. We obviously couldn't get into the original point of sale, which is when people actually buy their iPhone. That's like AppleCare already got that. So we started exploring repair shop, and that concept of looking for moments that matter and using embedded instead of going direct to consumer as the distribution method actually carried on, and it's still sort of how we think about go to market for our current products today.
That's amazing. Actually, moments that matter and distribution. That was a big insight from that sort of experiment. And then COVID happened. I guess 2020 came. COVID happened. That business, you were not like you were the original idea. It was a good idea, but not a massive opportunity. So you pivoted to a different idea. How did you decide to keep looking, and how did you find the e-commerce one ultimately, the ones that's been a breakout idea?
Yeah, so we started exploring this idea with like in 2020, where like the original idea was like so there was an e-commerce merchant. We're open to all sorts of like different product ideas. We probably listened to like 50 ideas through the in the pre-seed stage. And one of them was so there's a retailer that came to us and asked can you build a checkout add-on that basically a buy as refundable option that's an upcharge for our product. And we said, okay, seems interesting. We don't have anything better to do, so let's just give it a shot. So we explored building this option, and this like retailer had like a 10% return rate. So we originally just priced it at 11 or 12%, so slightly above their general return rate. What ended up happening is like only the people that already want to return and are most likely to sort of abuse the return policy would opt into that option. So that's but the attach rate was high. Like there were like if I remember correctly, like there was like 12-13% of the like people that see the option would opt in. So that told us that, okay, at least there's consumer adoption. And if we want to make this product work, we better figure out how to work on how to figure out the unit economics, because we're losing $3 for every dollar of fee that we were collecting. And explored a bunch of things, but eventually turns out that using shopping behavior to underwrite the returns program was the magic one that sort of made the economics work and made the product complete.
That's amazing. So a customer gave you the idea and you kind of went for it. Talking to customers, I guess, is really key, because you never know which direction they will lead you towards, and they will have ideas, they will have problems they want you to solve, and it's up to you to decide if that's a big idea or not. Now you started there, I guess, with the e-commerce one, working with smaller and smaller merchants, and realize of all the challenges you realize, and then now you're obviously working with large enterprises like massive marketplaces, millions of dollars in contracts. What was and that was a go-to-market improvement on the same product. Instead of focusing on the small merchants, now you're going after the whales. What was that? Would you call that a pivot or go-to-market pivot, if you will? Like, what was that process like?
Yeah, absolutely. Yeah, the path to get to product market fit and a sustainable go-to-market motion was not without challenge for us. Like after figuring out how to make the product work, like our instinct was, going to a lot of SMBs, and it wasn't really even like a conscious decision. It was just more so as a product founder, I just don't know how to do enterprise sales. So we just defaulted to doing SMB and product-led growth. So we actually amassed like over 1,000 SMBs as customers when we were like focused before pivoting to enterprise. So the volume was actually there, but what ended up happening was we realized the involuntary churn from the SMB was too big. Like there's a lot of merchants that are open. They're doing business probably a few hundred K per year in GMV and would just shut down after a year. So we quickly realized like SMB for e-commerce, maybe for SaaS companies that have sort of like a fixed charge per month, it would have worked. And there are plenty of examples that did. But for volume based, like volume driven, consumption based, like revenue models, SMB just from like a churn and revenue scale, like GMV scale perspective, was just not a sustainable market for us that would make the LTV to CAC work.
Right.
So we decided to pivot to enterprise. It's the same product, but we had to learn how to do enterprise sales from scratch. And it was a long and difficult journey, but I'm glad we made that decision as a group, and and now we're here.
Right, and you're being very modest, if I may say so. Like learning to do enterprise sales as a product oriented founder is not straightforward. You learned it, and you're landing big contracts, $1 million contracts, significant pipeline. What did you learn about yourself, or what did you learn about sales that made you good at this?
Man, there's so many things. I think like I would say like in terms of the top three is like the first at first I just didn't really know what sales means. Does it mean does it mean like is a car salesman the classic example of a good salesperson where you sort of only talk about the good and sort of bend on the honesty part a little bit, or like we just didn't know like what good sales process or good salespeople meant. So now, like one realization was it's about articulating the value and the problem, the solution clearly and succinctly. The better we could do it, and there's kind of a trade-off between relevancy and succinctness. It's really hard to present a problem, solution, and value prop in a few short sentences, but that's what's sort of needed to capture executive attentions. And then the second piece is probably specific to our category, but we are building a new category of product. It's not something that has existed elsewhere. We're not building a better version of X. These innovation almost have to go top down. Like a director of product or PM is probably not willing to risk their reputation to bet on a new innovative program where there's where it takes conviction alongside data to make the decision. But the founders and CXOs, like they're the ones that are most likely to drive a innovation, a net new product experience to the finish line. So that's the second thing. I would say the third thing is just I definitely underestimated for multi-million-dollar deals how long the sales cycle would be. There are just so many people you got to convince within an organization, and I think just like expectation level setting would be important early on.
Right, right. Very well said. The other thing that I often think about when I think about Seel and you specifically is right from 2019 until now. You identify an opportunity, move really, really fast, launch products on a daily basis, acquire customers on a weekly basis. You take a hill, basically. You go to the top of the hill and you realize that the hill wasn't as big as you thought, and then you find a bigger hill to take, and then a bigger hill to take. What is it that drives you? What is it do you realize about the hill that you've just taken and that motivates you to take an even bigger hill? Where are you going ultimately, do you think?
Yeah. So Yeah, I think it sort of boils down to the level of ambition and curiosity. So curiosity, I would say, is sort of what drives us to continue to explore. When we see a problem, we will understand why the problem exists. In that, what caused the problem in the first place, and also why hasn't there been a solution? Sometimes the problem is just short term unsolvable. Um, and there's a good reason why a solution doesn't exist. Sometimes a problem looks like a problem, but it's actually a feature. But until you sort of zoom in and look deep into that problem itself, it's hard to know if there's value in building a solution there. So I think curiosity drove a lot of this. And then being and also occasionally the solution is there and it's sort of a silver or gold level, in terms of value to build a solution for that problem. Then I think it's just about like asking yourself, is this the right is this like problem worth solving, and does that match sort of your level of ambition, like as yeah, is the size of the problem substantial enough that it's worth your finite time on Earth to build a solution for?
Very philosophical way of looking at it. Did you do a philosophy major by any chance?
Yeah, yeah. Both Bill and myself were. I did philosophy and physics in college, and Bill did philosophy and information science.
That's terrific. Now to our favorite subject, financing, of course. Um, you've raised 25 million plus from eminent funds like Lightspeed Ventures and Foundation Capital. Um, what was the financing experience for you? You've been through the same sort of experiences that many founders have. You pitched to VCs and VCs disappeared, and others gravitated towards you. What's been your process to dealing with or thinking about financing?
Yeah. I would say like most of my frameworks around fundraising actually came from you, Anamitra. I think like a lot of it has to do with one is like the preparation work, being able to articulate a story really concisely. It's kind of it's a sales process. Building relevancy and then building sort of a simple but ambitious story around being articulate the vision, essentially, and using data to back that. Like in the early stage, in the absence of a lot of tractions, I think it's about finding market data, and then to support the vision. That it is a problem. I think it all comes down to forming a formidable team with a plausible path to solve a big problem. Um, yeah.
That sounds like bullet points.
Yeah, it is.
That's a good framework. Any parting advice for the Zach of 2019 just getting started? What kind of advice would you give him?
Yeah. I think being like staying curious is a big part of it, and also I guess being more okay with pivoting. I think our first time we realized this may like the iPhone screen protection may not be the end game here. It was kind of a painful separation because we did spend months of time. It's a lot of sunk cost, both kind of emotionally and time wise and capital wise, and but in the grand scheme of things, the sooner you realize this is not the right path, the cheaper it is to run those experimentation in general. So yeah, I think like some people are really lucky where the initial idea that they worked on is the final one that worked. But I would say like probably for overwhelming majority of founders, that's probably not going to be the case. And just think of the early pre-seed process as a experimentation process, and you're not married to the what was the phrase again, like marry the market, date the product. It's a good
Wait, say that again.
framework.
Say that again.
Marry the market, date the product.
Ah, that's smart. I'm going to use this again. I'm going to use this from now on. Those are good parting words, Zach. I'm really excited about the future of the company, obviously, building a new kind of category and looking at decades of success for you and the team and Bill, everyone else. And good parting words for founders who are just getting started: marry the market, date the product. Well, with that, I want to thank Zack Peng, CEO of Seel. Thank you for being on the Pre-Seed Show today.
Yeah, thanks for having me.